Today I'm going to comment on this meme stock again. Anybody who follows me knows I don't cover these or follow them. And it came to me as we were looking at UBS, which is what I'm really interested in, which is the global financial plumbing. That's what I talk about a lot. And geopolitics and how it all intersects. And then we make our investment decisions. I'm not here to tell you what to do. I've said so many times, I feel that I'm just here to assist people in making the best decision for themselves. I run narratives. If you're new to this site, I would ask you to go look at my videos that I will repost on how I think about narratives and information, okay? Now, let's talk about this. Now, these meme stocks, they go back. I looked at them when they first got this short and all this other stuff. Let's throw all that out. Cerebus, what they call it, Robin Hood, naked shorting, synthetic shorts, all that stuff. Just throw it out. Just don't even pay attention. The question is where are we today? Okay? You got two sides of this trade. It's actually pretty simple. The first side is you got these firms that are short. Okay? That's it. Then, and all they want to do is cover. And anybody who thinks that these major international banks, with some of the smartest people in the world, have been slowly but surely chiseling down over the years their cost of acquisition, I think you're kidding yourself. But that's your choice. But look at it. The real question, the only question, after I did a video on this 2.5 years ago, is what is the CEO of GME going to do? Because he has a bargaining chip in that these guys are short, right? But you look at his situation. He's in a company in a declining business. Same with AMC. This is why these stocks were picked. And for the people who follow me, think of the basis trade, how everyone does the basis trade. Well, guess what? Everyone kind of was shorting these stocks, figuring they were just going to go bankrupt. Now, a lot of the shorting was done through derivatives, which made synthetic shorting and all this other stuff. Again, throw that out. Doesn't matter. All I'm saying is they were short. That's all that counts. So they want to cover, and the CEO wants to transfer wealth to the company, not to the stock. Doesn't do them any good. I understand. You own the stock. That's what you're interested in. Totally understand it. But the CEO, he's not thinking like you do, whether you like it or not. He's not. There were comments saying that he was bribed and bought out and everything. No, he wasn't. Because think of what he has to do. He's trying to take this bargaining chip and turn it into cash for his company, not for the stock price, all right? So he sits there and he says, I have a declining business model. And look at the size of this issue. If they just buy the bonds, which they did, okay, the converts, he got $1.3 billion. If they exercise, he gets another $200 million, $1.5 billion, 1.48 to be exact, okay? But this is a zero coupon PIK, payment in kind, all right? So you can think about it this way. If he goes 2 years without anybody exercising, he gets another $200 million, 1.7 billion, all right? So, and then you look at it from the bank side, they may need those extra shares to cover some short. And by the way, this bond is out there. So any bank that bought these bonds right now, right, they're not short anymore, whether you like it or not, on their books. The way we do risk, the way we do margin, the way we do everything, they're not short. It is what it is, okay? So, again, how does the guy, so let's go through a scenario, a narrative, all right? So your narrative is, I'm going to put out $1.3 billion worth of stock. You have a stock offering. You announce it. They use TD securities. You know, raising $1.3 billion in TD security, that would be a challenge, all right? But if they did announce that we're going to raise $1.3 billion, okay, how many shares is that? What would happen to the stock when that announcement came out? It would come down, okay? Now, when he gets the money, what's he going to do with it? You going to invest it into GameStop stores? I don't think so. all right? So he has to have a business model, and he needs time to start the business model up, because once he brings in the money and lessens the shorts, now people are going to look at it as a real company, and he's going to have to perform, right? Or the stock price will go down. So he's kind of caught. You can't stay as a meme stock for the next 50 years. And by the way, the stock's down 14% this year, but look at the markets. If the market really got hit, then it's possible that he could lose his bargaining chip. So they might have been, negotiating for months. And when the market starts getting hit, hey, this is my time, okay? Plus, think about what he does. Is when you do a convertible bond, it's converted at a higher rate, right? And this one, 29.85, all right? So he's looking for the conversion because he gets paid that money. Now when he gets the money, he's in a convertible, but no one's converted yet. And he even has stuff in there in 2 years. If it's over 38, then I can do it and all this other stuff. That's not happening, okay? It's not even gonna get close to that. Not even close, all right? That is, there's a super protection if when he gets the money, he hits on the mother lode and the stock goes up and he'd be able to pull it back, okay? So that's not happening. So what could possibly happen here? If I was the CEO and I was going to take in 1.3, I would be betting on 1.5 plus 1.7. So I believe in the end, this company is going to get $1.7 billion, all right? But let's just take it straight. They can't even afford the interest payments for one payment. They can't, right? They have EBITDA of 22 million. They're actually losing money every quarter. So you have to have free cash flow to pay for these things. He doesn't have free cash flow. But he can pay it out of the bonds, but he doesn't want to do that. He's trying to get the money into the company. So now he gets the money into the company. And now he has to do a business. Now he can't do GameStop stores. That's not going to happen. So I was thinking about what are the two things that I would do or think I could do to get away with that I could drive up the price. Me, I could either do AI or Bitcoin. He chose Bitcoin. I wouldn't have chosen AI because 1.5 billion is nothing in the AI world. So no one would believe him. On the Bitcoin, he could look at, what is it, SMCI, whatever it is, that other, that's a meme stock, whatever, right? So he cuts a deal. This was a negotiated deal. I hope you understand that, between the companies and the short people, right? And is there another deal coming along after this? I don't know. Will AMC do one? I have no idea. All I'm saying is, if you have this meme stock, your thought process is, how do I take a bargaining chip and turn it into cash for my company? That's all this is. I think, and I said this in the video, some smart banker is going to get a big bonus this year because I actually think they thought through this and it was, a fairly good solution. Are any solutions perfect? No. Are any investments perfect? No. There's nothing perfect in our world. So, given what he had, given what they were doing, given what the shorts wanted, given what the market's doing, it seems to me they came to an agreement. What do you think? Like and follow, and thank you for following me.